Hey, what's up, guys? Hope everyone's having a great day and had a good weekend. So today we're going to look over a specific pattern. This is from Bolkowski's Encyclopedia of Chart Patterns. He's got, in my opinion, the most extensive almanac of chart patterns that have ever been created. And he's tested them for over 30 years in traditional markets. So the thing is, he's not only tested them, but he's recorded the results on TradFi, and he rates them based on which pattern has the highest win rate, relatively speaking, compared to the other ones he's charting against. So one of them that he talks about is the right-angled ascending broadening wedge. And the characteristics of it would be simple. You're going to have a sell wall. I wrote here fake sell wall just because I'm assuming at some point there's going to be a partial decline and breakup. Typically, this sell wall, what it's doing, it's absorbing demand over here until eventually they decide, whoever's controlling the market, they're going to let the price go up from there. So they're in an accumulation range and they're locking it in that accumulation range. So this is the current price action in BTC, but if you go back, this was pre-FTX crash. This is one I actually shared in one of the Discords where I noticed the same pattern building, just slightly different architecture. You could see the broadening portion on the demand line over here where you have it angled downward, and you have a very linear sell wall where you could see it got rejected here, down here, here. So that's creating the bottom of the sell wall and then the high, but within that sell wall, it's creating equal highs. So if you just kind of zoom in like that, you have equal highs here. So you have a liquidity target within the sell wall that is essentially trapping shorters and then using it for liquidity to run up. Now on this one, the main characteristic to validate it was within this last push up over here, you had a partial decline. And Bolkowski talks about this. This is essentially where you start to validate the pattern. You need 5 touch points on the extremities. So it could be 2 up top, 3 on bottom. But then the idea is after that last extreme touch, when you get that partial decline and it shows an unwillingness to go to the bottom of the wedge, this is where you would enter on the pattern. And you could see all it did was it rebalanced this candle, made a partial decline, and then approached the wall. Now in the classic version, what these do is they break out and then they basically trap breakout longs and then bring it back into here for more accumulation at the neckline and then send. In this case, it just took right off. So if you zoom out, again, this is a 15-minute time frame, so maybe not the same time frame as the one we're tracking here, but you can definitely zoom out and see there's a 15-minute broadening, descending broadening right-angled wedge. But the idea is this one actually went up 17% right before the FTX crash. So it was doing what it was supposed to do until a black swan event happened. But keep this in mind: fake sell wall, partial decline, at least 5 touches on the perimeter of the wall, and preferably equal highs. So if you look at the current setup with BTC, you see something a little bit similar where you have this right here and you have equal highs developing. So you could see this internal high, all it did was take this liquidity, but the next one took this one and left equal highs. So what I'm watching right now with BTC, maybe it pulls back into the 4-hour order block and then bounces, or it goes to the bottom of the broadening wedge and then bounces back up. But on that next impulse up, I want to see if there's a partial decline. If there's a partial decline, then that would validate this for me, and I would assume that this is going to be a right angle broadening ascending wedge or descending wedge. And then your target is essentially the measured move from the bottom of the final pivot to the top of the neckline, applied to the neckline, and then that would target probably 26.7, somewhere around there. So if you flip it to Litecoin, this is one that I shared early with everyone in the Discord, but it's doing a clean version of it. So BTC is a little bit scammy. You could see this move right here. This was a complete deviation. In an ideal world, this broadening formation could have went all the way back here to where the original high was formed. In this one, it's a little bit skewed, but on Litecoin, it's perfect. So if you look at Litecoin, from this pivot to here, these are all intact. When you look at the drawing of a right-angled a descending broadening wedge, it's this partial decline that would make it valid. So we're going up against the neckline. If for whatever reason it fails to take the equal highs, which are waiting between here and here, and it forms a third equal high here, then I would be adding to the long if I see a partial decline. If I don't, either way, I'm going to take profits here, half off, and I'll re-add if there's a back test, because the back test, typically, it doesn't show it on this drawing, but the back test is what gives participants assurance that this is in fact a breakout of the neckline. And then you're targeting the measured move. So from this low to here, you're applying it to the neckline to there. So it's like a 4% move. So I'm in this trade right now. I might close momentarily half and then buy back over here wherever it bases, because it could base in this 1 hour fair value gap, or it could go to the propulsion block and then run up from there. But either way, I think there's going to be a bit of a sell-off here, so I'm about to pull the trigger on a sell, but take some profits. And then the idea is to fully cash out at the target, which happens to be well, I won't fully cash out, but I'll take another maybe 25% here, because the main target is going to be structure right up here. So you could see 1 drop, 2 drop, 3, and then basically buyers can't hold that line and it collapses. So this would be the main target I'm chasing, 72.68. But in the immediate term, this is a good take profit area. Add back, buy back here on the retest, take some more profit here, and then just keep compounding on the move into structure over there. But always have exposure, because I think on the high time frame, this actually took major liquidity on the move down. So it is now going to be targeting internal range. So you have this one and this one and this one. All three got taken by that wick. So I think at this point, they're going to be targeting a rebalance of the weekly candle, potentially up to this one right here. So let's see how this evolves, but just keep it in mind, that's what's trading right now.